and you might not have this, you might not have this directly in front of you, okay, is I want you to look at, am I closing more purchase units this year than I did last year? Okay, forget about your overall volume. Forget about your overall units. Just look at purchase units, because we know we can always count on those, and say, am I closing more purchase units this year than last year? That's the first test you need to look at, okay? If the answer is yes, you're in the right direction. If the answer is no, you got to really take a hard look at that. What is going on? I can tell you that my personal one-on-one, my VIP people, they're all up. All of their purchase units are up over last year. Their actual volume might be the same or maybe a tick less, but that's because there's less refis, or they did less refis this year or have done less. But the key is, how many purchase units, where are you at year to date, extrapolate it and take a look at it versus last year, okay? Then the next thing you need to look at in detail is, where did those purchase loans come from? Where did I get them? Who referred them to me? Those of you that have been hanging around me for a while know that your job is not to do loans. Your job is to find people who know people who need loans, become best friends with those people, and get them to refer the people that need loans to you. Your job is to get referrals, not write 1003s, or sorry, we don't even do that anymore. Not take loans, okay? That's the easy part. The hard part is getting the loans. I find most loan officers don't even know where their loans came from. After you're done figuring that out, then figure out, did I do less loans with Susie Q from Remax this year, more or the same compared to 2020? Okay? So I really want you to look at not only where did the loans come from, but what about the unit volume from your partners? Again, do not get caught up in loan volume. Purely look at units. Those are borrowers that were referred to you. Okay? Obviously, you all know I'd rather have you have, 4 $500,000 loans than one $2 million loan, because in the first scenario, you have 4 happy customers and 4 happy clients versus just one. Of course, I want you to do the $2 million loan if you get it, but the bottom line is you have 4 customers instead of 1 customer. Okay, so this is very important for you to look at this as you do your planning. Did your individual loan volume or market share per referral partner go up, go down, or stay the same? What did you do differently this year or last year that you weren't doing before, or that you used to do and stopped doing? What changes did you make to affect these things, whether they're positive or negative? And if you look at, I hear loan officers will say to me all the time, it's very common, Joel, when I was doing like 5 B2Bs a week, I can attribute those next 2 months were these huge high volume months. And then I stopped doing the B2Bs because I was too busy, and then my volume dropped again. I'm like, well, okay, duh. I think we know what we need to be doing, because it's pretty clear where that volume came from. Okay. You need to look at this in broader terms right now for next year. Okay. Next year, I don't know if anyone disagrees with me here. I don't think we can expect, it might happen, but I don't think we can expect to have a large refi year next year. Okay. Anyone doing predictions, looking at straight numbers, will tell you refinance volume will be down about 70%, I think. It should be about 30% of what it was. Okay. So if you look at your volume, what does it look like without any refis in there? Can you pay your bills? Are you going to be freaking out? What is going on? Okay. It's very important because there are things that you can do right now to change that trajectory if you get off your butts and do stuff, okay? Or what I like to call GSD. I think Teresa Green's on here. It's one of her favorite things. Get shit done, okay? So we're going to look at our volume. Did it go up? Did it go down? And we're really going to look at where did it come from? You know, I closed 100 loans, 100 purchase loans. Who referred me these loans? Where did they come from? What am I doing to increase market share with my referral partners? Those of you that are familiar with my systems, how many agents in 2021 did you move from your division to your company? And did you move any company agents to your platoon, which we all know is a very tall order? Okay. How many listing agents did you convert to your company last year? How many? Literally 0, 1, 2, 3. How many? These are all game changers. Okay. Are you concentrating on that stuff? Are you doing the core stuff to push your volume higher? This is what should be happening year after year. Your purchase unit volume should be going up anywhere between 15 and 20% every year, but the percentage of agents that are referring you that business should be dropping every year. For example, the first year you closed, I'm going to do simple things. We're going to pretend for the year. The first year you closed 10 loans for the year, referred by 10 different agents. The second year you closed 12 loans, referred by 9 different agents. The next year you closed 15 loans, referred by 8 different agents. I'm sure you all can see where I'm going with that, because your job is to develop new relationships and deepen existing ones. That's what you're supposed to be doing. If that's not happening, you're doing it wrong and you're going to stall out. Sean Gaudreau is on here right now. He has his camera on. Sean, I'm not going to call on you, but Sean's not shy. Sean is in Boston, and we had a conversation about, I feel like, Sean, I think it was maybe 60 days ago right now, where he said to me, how long have we worked together, Sean? 2 years or more? More than 2 years, you think? About 2 years? He said to me, he literally said, he's like, all right, Joel, now I finally get it. And I was like, what do you mean? He goes, it took me a little while, but now I literally finally completely get what my job is. I completely understand. He goes, I kind of understood before. I always believed what you said. I did something. He goes, but now I totally get it. And I'm all in. And all he was saying is I get that my job is simply to create a set of new best friends with people that happen to be real estate agents, period, end of discussion. If you're not doing that for 80 to 85% of your working week, you are doing something wrong, very wrong. Okay. Now, a couple of weeks ago, I had Alec Hansen on with Loan Depot. He's a great guy. He talked a lot about branding at the end of the call. I said, do you have some things, you would want to tell loan officers moving forward? He said, yeah, develop your brand. Okay. I want to talk to you all a little bit just about this today. Do you have a brand? Who are you? Who do your clients and your agent partners think you are online on social media? If you're playing the game, these games, I forget how Alec put it. It was great when he said, he's like, oh, I love these people that are like, I'm not on Facebook. I rarely check my Facebook or whatever. And he was laughing. He's like, oh, so you rarely check into the world because, by the way, everyone's on Facebook. Everyone is checked in. So if you're saying you're checked out, well, that's your problem. You got to be checked in. That doesn't mean you got to do it all day, every day, but you have to be checked in. So who are you? Who do people think you are when they think of you? Are people thinking of you at all? Okay. What is your personal brand? Do you have one? If you don't, it's going to be important moving forward that you do, as loans fall away and there are less loans for us to get. You're going to have a lot of big dog loan officers increasing their market share in that market. So the overall loans are going to go down, and you're going to have other people literally going up. They're not even going down at all. They're going up. They're taking a bigger chunk of the market share, and they're going to take it from you because you're not organized. You're not working hard. You don't have a brand. No one knows who you are. You're not out there. You've been sitting on your butt doing refis, and now you decided, okay, I think I better concentrate on purchase loans. Now, I think most people on the phone with me don't think that way, or you wouldn't be on the phone with me probably. But I want to let you know that it's coming, and I don't want anyone on this call's lifestyle affected by this type of stuff. Okay? If you don't have scheduled, ready for this, 7 B2Bs a week right now, you're failing. Okay? 2 of them will probably cancel. So that'll be 5. If you think you're okay with 3, that's a fail as far as I'm concerned. This is the easiest time of the year to do B2Bs. It's simple. Everyone's getting in the spirit. It's easy. Hey, want to grab a drink, want to grab a app, whatever, celebrate the year. Everybody is starting to get festive. This is literally the easiest time. Okay? To say you don't have time or you can't make it happen is crap. It's BS. All right? You need to do it. It's your job to do that stuff. Okay? If these things are not scheduled in your calendar, you will not do them at all. Okay? If you don't know what you're doing, if you open your calendar right now and you cannot see B2Bs for the next 4 weeks, you are failing. Okay? You can go ahead and open your calendar right now and look at it. Do you see B2Bs 3 weeks out from today? If you don't, you are failing. You should be able to see that. Okay? You should be completely scheduled out. All right? Now, normal growth. I put as this, for those of you that did 50 loans and say, I'm going to do 100 next year, that's great. And I'd love to see you do it. But if I see anywhere between 18 and maybe 23, 24, 25% growth every year compounded, I'm very, very happy with my personal one-on-one clients. Very happy. That is slow, controlled, relationship-based growth. Okay? That's easy to manage. You can stay in line. You cannot fall off. And you can keep those relationships building and building and building. Okay? We are still 5 million houses short for houses that people want to buy. Being in our business is awesome. Okay? Some of these houses are going to start to shake loose. I know that inventory is extremely tight right now. Okay. I know that you're doing a lot of pre-quals and pre-approvals that are taking 2 weeks, 4 weeks, 6 weeks to get under contract, James Hoddle, you punk, to get under contract. Okay. Let me tell you something else all pros are doing right now. They are doing pre-quals a half to 3/4 above the going rate on that day. Those of you that have not been around for a long time like me and have never seen a massive market swing before, there's nothing more painful than getting caught with a bunch of people pre-qualified at 3.5 and now the rate's 4.5 and literally they do not qualify anymore, or the payment they're looking at scares them and they back out, and your agent partner has had them in their car showing them houses for 3 weeks straight. Do yourself and your partners a favor and put a big pad in there with how you're running numbers for people. Do not worry if they freak out. If they freak out, these are the things you talk about at B2Bs with your partners towards the end. Hey, by the way, in order to serve you better, I'm going to be doing this with all of our clients now. I want to make sure that even if the market moves, you still have a guaranteed sale. Okay. There's two pieces to that. One, it's being qualified. Two, it's telling someone your payment should be about this, and then their payment's about $300 a month higher than that, or $200 a month higher, and they freak out and no longer want to buy. Okay. Those of you older dogs on this call have seen this many times, and it is not pleasant at all to have that conversation with the agent. The agents expect us to take their buyers, their clients. They expect us to kick ass, make their clients feel very good, do a great job, get them approved and closed on time, and make them happy. People are not happy when you tell them one thing, then you tell them something else 3 weeks later, even if the market moved and it's not your fault. Okay? This is very important. This market is a little wacky tobacco right now. Okay? The best loan officers in the country have every single loan in their pipeline locked, unless it's a short sale, new construction, or some kind of funky New York City condo that you can't lock for a while because of some funky rules. All right? Everything, nothing is floating. Everything is locked, including refis. You all know what an unlocked refi is? It's duty in a bag. It's nothing. It's a loan that will never close, and who cares? Okay, it's like an unlocked refi with no appraisal. I don't even know why you bother putting that in your pipeline. Okay, the best loan officers in the country are exercising what I call doc, lock, schedule, and close. They make their refinances look like purchase loans in their system, so their ops people basically think they're working on a purchase loan. There's no different. The best loan officers in the country don't virtually yell at their staff and go, hey, can we close Smith the week of November 8th? They don't say that because it's already scheduled. They already have a day that it's closing that everyone is pushing to. Much easier to get payoffs and get all the numbers in order. Okay. The other thing, I know I'm covering a lot of stuff here. The best loan officers in the country are doing consistently is completely docking people up front. No exceptions. Nothing. Everything. LOXs, large deposits, every single thing you need is docked up front. Loans go into underwriting. Let's assume the appraisal is ordered, and there's a condition for appraisal, title, HOI, maybe maybe a COVID VOE at the end or whatever, and earnest money. That is all. No LOXs, no large deposits, no kids' ages, no little crap that an LOA cleans up. None of that. They simply put the appraisal in the file, the title in the file, the HOI in the file, and close the loan. Okay? Look at your approvals right now. You have conditions all over them. Either that's your fault or the underwriter had a bad day and needs to remove them. But you can't close more loans and give incredible customer service unless you're rolling like that. I'm letting you know that each one of you has competition in your market that is rolling like that, and they will smash you down if you don't know what you're doing. Okay? Very unique market right now. We have a lot of loan officers that are what I call rudderless. They've been doing a lot of refis, and their refis dropped off, and their company laid off ops people. And one of the ops people that got laid off was an LOA that helped them with their loans. Now we have an LO that probably doesn't really know what they're doing, trying to do the loans themselves, and they're blowing up. The best loan officers on this call right now will tell you, if I unmuted them, they are getting more save calls than they've ever gotten from their partners, because loan officers are screwing loans up. It's really not even them screwing it up. It's they lost their LOA and never knew how to do it in the first place. So it's a very unique time to take market share right now if you're out. Okay? That was a fairly long monologue. Does anybody have any questions or anyone want to put anything in the chat? Wow, nothing. I mean, Sean Gaudreau is speechless. This could be the first time ever. He's looking away right now. Does anybody have any questions for me, or does anyone want to make any comments based on what I just said for 21 minutes? Nothing, huh? Was it that, Michael Most? Was I that lucid? Point made, point taken? Is that?
For me, it was, I've heard this and I just love hearing it again and again and again. And to be honest with you, I mean, my purchase market's on fire. And it's amazing because of all this stuff that we've been putting into place for the last year and a half, not even the last month. So anyone that's late to the party, suckers, I don't know what to tell you. Like,
no, this is it. No, this is exactly what's going to happen. So everyone, you know, those of you that I see every week, that's great. But I am telling you right now, nose to the grindstone. Now is the time to put the pedal to the metal. Loan officers are going to be falling away all over the place, and they're going to allow you to just absorb market share in a big way. And your purchase volume should be growing. And it's growing because you are literally taking market share from these other, you know, lazy loan officers that don't want to get off their butt and do their job. Okay. They're just praying the refis will never go away. I don't know if I said this last week, but I was interviewing an LOA for one of my one-on-one clients. And I was asking the LOA, so talk to me about your company and, you know, why you want to leave and whatever. And she says, well, my company just recently has decided to make a shift from refinance to purchase. And those of you that know me, it was like the funniest comment I could have ever heard. They're just like, oh, I think we'll just do purchases now. I think that's, you know, just let's do purchases. And I was thinking, wow, how fast that company is going to be out of business. Meaning they don't even understand how asinine that comment is. I mean, if you were thinking that way, you should have been doing both the whole time. What, now you're just going to flick the purchase switch? There's no switch to flick because there's a bunch of big bodies in your way now, and you're never getting to these potential agent partners. Okay. Agents right now are looking for competent loan officers that they love and trust with their clients to help them grow their business because of how well you make them look. The best loan officers in the country are not transactional at all. They're relational. They have way more fun. They do not get beaten up over rates all day. If they have to move a settlement one day, nobody cares because there's a very high level of trust. Okay. Everyone can do this. You heard Michael Most say last year and a half, when I met Michael, he was a transactional, hardened criminal, still closing, you know, a lot of business every year, you know, over 100 million every year, and doing it the hard way. And now he's doing it the easy way, and his volume is going up, meaning his purchase volume is going up. It's a little bit like Tiger Woods' example. He's like, I think I'm going to change my swing. Oh my God, why? You've won all these tournaments. Well, now I'm gonna win. I'm gonna win even easier. I'm gonna win even better. Okay, so those of you that, you know, if you're interested, if you want to know more about this kind of stuff, just check out a Crush Group on my site. There's a bunch of Crush Group people on here right now, or have been through Crush Groups or in Crush Groups. You know all my acronyms. You know what I'm talking about. If you don't, there's more information on there. But the reality of it is there's no better time to be a loan officer right now. It's super exciting. Be really looking forward to 2022. I think we got to run through 25, to be honest, on fire. Run a big run. But I truly believe that you're going to see less loan officers doing more of the business. You're going to see more people getting out or being forced into being on a team or being like I'm going to say app taker, but I know we don't take apps anymore, but intake people for a bigger producer. Okay. So I just want to check the chat real quick and make sure nobody put anything in there. Okay. Nobody did. Everyone, I will talk to you all what's next Monday? Monday before Thanksgiving. Right. Everyone, next Monday, I'll talk to you. I'll be able to give you the highlights from the 7th annual Big Joel Burger Crawl that will be going on Sunday. I'm sure you'll be very interested in that. And I will talk to everybody next Monday. Hopefully you got lots of notes, get motivated, go kick some ass. See you all later. Bye-bye.